What's up? This is Dan Fredenberg for Figgerridout.com and DanDoesDeals.com and FunnelFixing.com. The entire internet, really. You in the audience in there, whether you're coming from law or any other profession and into real estate, one of the biggest challenges is you need to relearn how to introduce yourself. So, Michael, can you introduce yourself for the audience, please?
Sure. I'm Mike Gilman. I'm the founder and managing principal of Cross Mountain Capital. We're a boutique sponsor, currently approaching about 20 million in assets under management.
One of the things that we wanted to talk about in the episode today is quitting a high-paying job. And I think the biggest thing is risking your accredited investor status.
My career, I traditionally gravitated more to the business side. So after law school, I worked in investment banking, supporting lending and trading businesses from the legal side. Did that for about 10 years. And now during this time, when I was sitting on the trading desks and just looking at these rules and seeing what's going on, some of the most sophisticated players on the planet just getting blown up on trades and events that are happening out of left field. I said to myself, if these are some of the smartest people and they are not consistently making money and just seeing all the turnover on Wall Street, I said to myself, there has to be a better way, and that took me to real estate, and specifically cash flowing real estate just seemed like a very safe way to invest. You're investing for cash flow. If the property goes down, it doesn't matter. If it goes up, doesn't matter. Well, it does matter. That's great. You could do a burr, but it's not, it's very conservative. And so that took me to tertiary markets. I was in New York City at the time, and there's just the pricing here made no sense. It's all an appreciation play. So it took me to far-flung markets like New Hampshire and Vermont, close to the border there. And there were no investors, and the deals were plentiful. And so what I started doing over these 10 years while I was, on Wall Street, was just buying up and assembling a cash flow portfolio, buy and hold. And so as an example, let's say my going in cap rate was 10%, right? My cost of capital, let's just say my loan, let's say it was 3.5%, right? That's a really nice spread you're making on your financing, right? 6.5%. That's not bad. And so it's just a very safe strategy. And so I kind of just built up a portfolio, and last year decided it was time to pursue this full time. And the big transition I made was moving away from investing for my own personal account, or using my own funds, to pooling capital, because there was only a finite deals I could do if I was just using my own funds. After a few deals, it would be exhausted. And so, eventually you reach this point where you realize that to really continue, you need partners, you need a team, you need to pool capital to take the next step forward.
Right.
So that's what brought me there.
And nobody is all of the pieces of the puzzle. And I think that that's something that's really important for people who are new getting into real estate to realize. I think
absolutely. I mean, you hear it time and time again, people saying the team. It comes back to the team. And
if you ever go to any of the coaching events or networking events, like all the rah rah rah, lots of energy, you can do it, all that sort of stuff, you'll see people being told from stage that oh, you need to quit your job, you need to do this, you got to make this happen, and all this kind of stuff. And it sounds to me like you are in the camp of saying, like, well, make sure that your commercial real estate investments are basically making you enough money that you're at or near the accredited investor status just from those investments.
I'd frame it more in terms of just cash flow, so you could eat and live, right, as opposed to an accredited investor so much, because you do have to keep in mind that on the accredited investor side, you can meet that threshold with net worth requirements, which after a few multifamily properties, you should be well on your way there. The salary part can be a little tougher, especially when you're self-employed. But it's an either or. again, the important thing is just to have a sustenance. And so it's not that you have to stay at your job. It's if you're leaving and you want to do real estate, make sure you at least have an income generating um, source, whether it's wholesaling or rental portfolio or what have you. It's just going to make things way more easier. And you'll also be able to talk with credibility. It's tough to be taken seriously when you're like, yeah, I just left my job. Let's do some deals. Um, so it was tough, but unfortunately, and when you look around it, a lot of speakers, they'll tell you it's tough. I think the majority of them worked two jobs while they built up their business, and over significant periods of time and effort, it they were able to realize their dream. And that's one of the great things about real estate is time is really kind to it. Even if you have a bad entry, the passage of time and the just depreciation, a rising tide lifts all boats, will typically bail you out at the end.
Right. Yeah, that makes a lot of sense. And of course, the reason, just for anybody in the audience who isn't aware of this, the reason why I keep on talking about the accredited investor status is because a lot of these investments, especially because of the SEC requirements that you can't publicly advertise unless it's a 506C, you have to be an accredited investor in order to be involved in any of those. So just the not being an accredited investor, it does get you out of a lot of possible deals, and there's the credibility as well. I like your strategy of making sure that you at least have the net worth excluding your primary residence. That needs to be added.
I was shocked by the turnover I saw on Wall Street, or how easy it was to get canned, kind of the revolving doors. And yeah, so they made a lot in a year, but then they're on the sidelines till they find another job. So just seeing that atmosphere, I thought to myself, there must be a better way, and that's again what took me to real estate.
So does that make you question, the sustainability of the entire industry, or do you think there's always going to be people who you'll have to pardon my cynicism, people to chew up and spit out?
I mean, I think it's more or less business as usual. The kind of customs will always be there. The changes you're seeing in finance are more driven by technology and sort of fundamental macro shifts. And a lot of these companies are becoming much more like tech companies, and becoming more lean, more automated. For example, when I wanted to be a trader, and actually for a time in college, I did a lot of day trading. So when I joined, this was at Bank of America. I was in the legal department, did a rotation on the desk, equities desk. This was around 2008, 2009. Markets were collapsing, and the traders straight up told me, "Don't do it. Don't. We're getting replaced by machines, and if you can't code, you're not going to bring much value. So you either need a book of business, or you need to be a coder." And so that's how it's changing. It's just becoming technology based.
Yeah, that's it. The reason why I started smiling about that is I don't know how much research you did about me, but one of the things that I've done is I uploaded myself to YouTube. I put out 366 videos on 366 topics in 366 days, and part of it was to basically show that a lot of the online coaches that say it's like, oh yeah, just do this, and like the world's going to be your oyster. I'd already been working for a single family, so a residential fund, with 9 figures under management, which is no big deal as far as Wall Street goes. But I was watching them dump like 150K in ads over the course of like a month or two, and I'm going like, well, either the people who are buying ads in those amounts are complete morons, or like organic traffic, as we call it in the tech industry, which is where you're not using paid ads, you're using hustle, you're talking to people. It must not work. And so one section of a contract that lawyers tend to spend most of their time looking at is the reps and warranties section. And I was wondering if you could say a thing or two about, like, why is it that that's the spot where, like, most of the action is going on, or, have I just completely misunderstood it?
Yeah, I'd say it's definitely a spot where action's going on, and it's funny, right? Because it's kind of irrelevant to the fundamentals of the transaction. So really, I think that a lot of time spent there just typical kind of attorney risk mitigation, because that's the section where it's easy to default on the contract. Typically you'll have a lot of blanket statements, and that you warrant and you pledge this, and you're making declarations that if they weren't true, the bank could call it default in most cases. And so I think a lot of energy is spent on toning down kind of the absolute nature of the statements, giving more legal room.
When it comes to education, if you in the audience, if you're trying to learn more about real estate, one of the things that there's a big difference between what you learn in a course or at an event or whatever from real life is that all those general things, you alluded to it, all those general things of like, how does a deal work, they become way less important. And what becomes really important are the specifics of that individual property.
So, my take is if you look at real estate and kind of how does one property differ from another, a big portion of that's going to be the jurisdiction, the location, the municipality. Each one has different rules. There's different tax rates. That's just from a kind of legal perspective. Then there's the environment's different, material costs, energy costs. Everything is completely different from area to area, and even within the same state. So that's why it's hard to apply, general rules like, you see the 1% rule or, something else. You can't look at it so myopically. It's certainly helpful to quickly perhaps analyze deals. Like, for example, one of my quick strategies for analyzing deals is I'll just look at the gross rent roll divided by 2, and that's going to be my NOI. And then I look at the purchase price. Does this cap rate make sense? And so, the generalities in that situation can be helpful for quick filtering, but when it's time to dive into the asset, that's where the experience comes in. It's tough to learn it from a textbook. Certainly, you get guidance, but a strong mentor is helpful. Or if you're kind of have the character, you just charging in and taking it on the chin and learning, which is actually, my first deal was I just rolled straight into a 20 unit and just kind of figured it out.
I always like to take the arithmetic and ground it in something that you could define or explain to an 8-year-old. And you mentioned about taking the gross, dividing it by 2, and that's the NOI. So basically, where I would feel comfortable with the same arithmetic is that if a building is operated well, you are going to have an expense ratio of 50%, maybe 45%. And so, like right there, just some back of the envelope math, that if it's not being operated that kind of level, then you're not really being effective at operating. If you want to become fantastically wealthy, I don't think you have a choice but to have some part of your portfolio as in real estate. You have to own real estate if you're going to become fantastically wealthy. And so that means it doesn't matter where you got your money, you're going to be coming to real estate eventually. And so when I say extractive economy, I'm just concerned about like unlike tech, which is my background, tech is still, I wouldn't call it a mature industry, especially not in the sense of real estate. Real estate has been around for centuries. And so we've gotten pretty good at figuring out the details of how a deal will work or whatever like that. But I'm especially because I did the digital side of coaching, and because I was also an administrator for all the inbound emails and all that kind of stuff, I was aware of some of the things that students would say to say it's like, oh, you know, this isn't working, you know, oh, this is a scam, you know, all that kind of stuff, even though there is obviously legitimate business behind it. So one thing that I think some people might be concerned about is that real estate in general, it's the only reason why full timers are actually making money doing it is because the money's coming from somewhere else. And I'd like to hear your comment on that, but more importantly, because I think anybody who's watched this far in this interview, because they're in real estate, I think that comes up as are you barking up the wrong tree if you have no skin in the game? In other words, if you don't have any cash to invest, are you kind of wasting your time trying to get into real estate? So, what comes to mind about those two things?
Yeah, I wouldn't say you're wasting your time. I think you need a plan. I think what if the goal is to do a deal, then how are you going to add value without money, right? And so you can find a great deal and bring it to someone that has the capacity to take it down, and then so you could wholesale it, for example, collect an assignment fee. Or maybe if they're syndicating it, you can get into the GP just for the simple act of finding the deal. And so absolutely not having the funds shouldn't be a barrier. It should encourage creative thinking in ways where you could utilize your skill set, your edge to add value to somebody else. It's because when you're adding that value, that's when it's easiest to partner with someone.
That's really great. Okay, so in a deal, then who is the perfect person to find you, as far as like, they need a partner that is exactly like you? Like what kind of traits does that person have?
Yeah, so in terms of, I look at it in terms of our team and what are we currently missing. We have a guy that does underwriting. We have an ops guy, and so in probably the area we would need the greatest help with as we scale is kind of marketing, investor relations, and capital raising. And just speaking of technology, one of the things we do is deploy some of these platforms out there that are technology based to look for off market deals. And so we have a robust pipeline, and it's really matching that with the capital. And I'm also happy to speak about some of these platforms just because they're kind of technology based.
Yeah, sure. Yeah, that sounds fantastic. So what kind of platforms? So we're talking direct to seller approaches to find these off market deals.
Yeah, so one platform I've been working with in the last year is called Offered, OFFERD.com, and they're the only company I'm aware of that combines advanced data analytics, kind of like CoStar, Reonomy, click on a property, see everything about it. But they combine that with an off-market acquisition team. So you can use their platform to compile a list of assets, and they have all kinds of filters to hone in on areas that are experiencing growth, this and that. But you can compile a list and then tell them to go after it and see what they can dig up. And so that they go direct to the asset owners and try to engage them. So we found we've been able to penetrate some tough markets through this off-market search, because what tends to happen, and I'll just use Denver as an example here. We just did a 54 unit in January. That was a Class C to B flip, purchase price of north of $8 million. But Denver is a tough market to get into if you're not local. It's super competitive, kind of insulated. Everyone knows everyone, and so we knew if we wanted a really nice asset in this market, at least at this time where just everything's so well bid, the only shot we'd have is getting it on an off market basis where we wouldn't have to clear the field, or it wouldn't go to like a known commodity, which is what the brokers will tend to do, and rightfully so. You want to give a deal to someone you've dealt with and will close a deal. So that's that's an example of where technology is really helping sort of in the sourcing business for us. But it runs the full gamut. You can't, what we're working on now is just implementing the systems and technology across every part of the funnel, whether it's at the very top through, active campaign and the kind of messaging to more at the bottom of the funnel, someone becoming an investor. It's our big focus right now is on systems and just avoiding the manual processes.
So the other question I wanted to ask, it has more to do with just legal experience in general. I found out that in law school, the part that most people fail in is civil procedure, and I was wondering, like, why is it that civil procedure is the one that that so many law students basically get nailed on?
Yeah, I'd speculate because it's so boring. It's just tough to want to memorize it and figure it out. It's just archaic, and what's interesting is that's it. That's before the trial actually hits the merits. 9 out of 10 times something's going to happen on the civil procedure end to where case is dismissed or it's not heard, or something happens. So it's actually a type of warfare that just burying someone with the right amount of paperwork and causing grief for them. So just getting back to your question again, I just think because it's so, a lot of it's not even logic. Like there's no kind of internal logic. It's just rules on a piece of paper. Oh well, your format has to be this, and this is how you have to do it. And so for me, that's certainly one of the not only am I a litigator, but that's kind of one of the classes in law school I tried not to attend, to tell you the truth.
Right. It's been absolutely fantastic working and speaking with you. So if somebody wants to get a hold of you, and what's the best way? Should they connect on LinkedIn or through a site, or what's the skinny?
Yeah, LinkedIn's great. Look me up, Mike Gilman, Cross Mountain Capital, or feel free to shoot me a message, Mike at crossmountaincapital.com. And then if you visit our website, feel free to sign up for our newsletter or any number of resources. We're always looking for partners, whether it's on the equity side or kind of, the lender side or jurisdiction specific partners, boots on the ground. The two markets we're active in right now are Colorado Front Range and Northern New England. So please, if any of your listeners happen to have interest in those markets, don't hesitate to reach out.
All right, excellent. Thank you very much. All
Thank
right,
you. It was a pleasure.
awesome.